I want to spend a little time on crypto. It has been an incredible month, and fears of systemic collapse have been rife in the marketplace. So we've seen Bitcoin, it peaked way back in November at 69,000, and it is now at 19,500. It is still higher than its pre-COVID 7 to 10,000 range. And it is just about at its 2017 high. So this could be some support. It's also at, it is below its 200-week moving average, which is at 22,500. So there is some concern that that is the new resistance. I am feeling a lot better about what's going on in the crypto world right now. You'll see our Bitcoin monthly. I would say, we're neutral to positive. We're waiting for a few more capitulation signals. And of course, time will tell on the systemic side here. And we haven't heard of another stress signal in the last few days. So that's good as well. So what I will leave with is what's happened in the crypto market gives you a sense of why it's going to work long run. It's transparent. And there's a lot more trust in the crypto ecosystem because of the transparency and the over-collateralization than I think there is in the traditional financial markets. And when we wonder why are the CDSs going up on these banks, we wonder about the reach for yield and how leveraged some of these situations are. And we don't know where they're hiding. And so maybe that's all this is like, okay, the crypto market has alerted us that this reach for yield went way too far. There are too many excesses, too much leverage around it. Hedge funds leveraging 10 to 1 when yields are 2% so that they can reach the returns or their return objectives. Maybe there are some problems out there, and we will find out. But for right now, I'm relieved, number one, that we have so many signals that will get to the Fed in some way, shape, or form, even if they have to wait for the CPI. They will get into the CPI. And that they are suggesting to me that the Fed has already gone too far, and that if it increases rates again, I doubt it'll be 75, maybe 25 or 50. I even think that will be a bit too much given what's going on out there and given the recession we're in. But at least the numbers, and part of this is downward revisions. Originally, the Fed thought these numbers were very strong, consumption very strong. No, consumption's falling apart. Believe it or not, bad news is good news now, as tends to be the case in a bear market when inflation is a concern. So bad news is good news, and it's always darkest before the dawn. I believe we've passed the darkest place. There are others out there. We are reading them in the press. They say we're only halfway there. I think they follow algorithms. I've watched a bunch of algorithmic behavior that just chases an idea until it stops. And I think we're getting close to that point where they, who seem so right with their negative stance over the last year or so, will be on the wrong side of that trade.
That's it for today, guys. If you found this video useful, then don't forget to like the video and share this knowledge with your friends and family. And don't forget to check out the full video, link is in the description. Thank you.